Welcome to Drill Down Earnings. We have the latest quarterly results from Oracle Corporation. The stock market loves them. I love them. I'm the chief market strategist, Cory Johnson. This is a business story behind one stock on a move, and I'm biased on this one. I own this stock. I'm very excited about these results because Wall Street's very excited about the results. And this stock has been on sale over and over again in the last 2 years. I don't give stock advice, and I'm not doing it here, but I'm happy. All right, Oracle. First quarter, fiscal 2025 numbers. Wall Street likes a beat or a miss, and this was a beat. Wall Street was looking for $13.2 billion in revenues. It was better than that. It was $13.3 billion. It also beat in earnings per share. But we want to dig into the business here, understand what really happened here with these numbers. So 7% rise in revenues is really good, and an improvement upon the increases that we saw last quarter, kind of back where we'd been in recent quarters before that. And fantastically profitable. I'm not talking about gross margins, operating margins of 30% on a very big business. It's doing, like I said, 13 billion in revenues every quarter here. And yeah, it's driven by AI. They're seeing fantastic growth in AI. Now, when we think of Oracle, what are we talking about here? Because the business has changed a lot over the years. Yeah, there's some hardware that's not doing great. Their services business is doing pretty well. Cloud services, cloud license support, that's 79% of their business. And their cloud growth has returned now, 8% in the most recent quarter, the biggest increase in revenues in that sector that they've seen in 2 years or so. So that's really strong here. We look a little bit deeper. They've been building cloud databases, 162 cloud databases in operation, under construction all over the world. And these are some of the, some of these are really big, 800 megawatts. They've also got some tiny ones, or smaller ones at least. And what are they powered by? You got it, NVIDIA GPUs. These guys are spending fortunes in this. They say they've signed $3 billion worth of GPU contracts, which is going to grow their business in data centers exactly where customers want them. And also, there was a couple things also that really just jumped out here with these numbers. But one of them is their RPOs. Their back orders grew at a fantastic rate, 53% growth in their orders, their RPOs. When you compare that to the 7% revenue growth rate, it's great. It's a really strong contract backlog, but it means that revenue growth is going to keep ticking up for the remainder of this fiscal year that they're just reporting here, at the very least. And then they announced this big deal with AWS. Amazon and Oracle hate each other. This is hell freezing over. This is the hope for humanity here if these guys can get along. And yeah, Oracle's latest, including their Exadata hardware, their database software, version 23 AI, all offered on the Amazon cloud and AWS. That's just an amazing development. Amazon used to write white papers telling people how to get rid of Oracle. Larry Ellison, the CEO and founder of Oracle, the former CEO and founder of Oracle, the chief technology officer, whom we'll hear from in a moment, used to talk about how lousy the Amazon databases that were competing with Oracle are. Now they're all lovey-dovey. How do they like it? Who cares? How does the stock market like it? The stock's up 9% in after-hours trading after rising 10% on a year-over-year basis. But as you can see, this stock is sold as low as $100, actually below $100, right around Christmas time. Now in after-hours trading, it's trading at over $1.52. Just a fantastic move in this stock. And yes, I'm biased. I'm very excited about it. But again, that RPO surge is the number that really jumped out at me. That 53% increase in RPOs. Last quarter, 44% seemed amazing. Lots of customer orders as they're rapidly building out these data centers, as they're throwing off tons of free cash, over 100% free cash flow to net income for this company. So very profitable, lots of order growth. What's it all about? Well, here's founder and CTO, Larry Ellison.
Every Oracle data center, from the largest to the smallest, are identical in features and functions. They only vary by scale. That means we have one suite of automation software that automates all of this. Nobody else does this. No one has that level of automation, that level of autonomy. It allows us to get much better margins in our database business and our SaaS business and the rest of our cloud business. Our clouds are more automated, so we have very low labor costs. Our networks are much more efficient. The RDMA networks run so much faster. If you run twice as fast, our costs go down by half. And our networks are much faster than the other clouds. So we think our potential as we scale, our potential to deliver much better margins than we're currently delivering are very real.
So there you have it. The always excitable Larry Ellison. Gotta love him. All right, what's it all mean? What's your big drill down earnings takeaway? And what's one number that tells us a whole lot? The drill down earnings bite? I will have that for you right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Oracle has just reported fiscal 2025 first quarter earnings, and they were good. I am biased because I own the stock, as I mentioned, but look, here's an essential summary, your drill down earnings takeaway. $13.3 billion in revenues, up 7% in a year-over-year basis, and very profitable revenues at that. But the one number that jumps out, the mystery number, of course, is how much they're going to make with their new Amazon Web Services deal, hell freezing over. That's great for Oracle and for Amazon and Amazon Web Service customers. But the drill down earnings bite, the one number that tells us a whole lot, 53% growth in remaining performance obligations in orders, combined with 7% revenue growth. That's great news for the rest of the year for Oracle. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. And check me out at X at Cory TV. Leave some comments for us on Instagram or TikTok at Drill Down Pod. Tell us what you think. We'd love to hear from you. You know, we can make these offerings even more what you're looking for.